that was what we were finding specifically around the digital asset space is that as an emerging asset class that exhibits low correlation with the vast majority of other asset classes out there, there's a very asymmetrical equation there where there's putting in something in the area of 4 to 5% has potentially exponential upside while also having relatively minimal downside to the health of an overall portfolio. Where
Welcome back to the Money Seat Podcast. My guest today is David Doss from CKC Studio. David, welcome to the show.
Thanks for having me, Dave.
David, I understand that you are a crypto/digital asset expert. You've been in the space for quite a while now. Tell us a little bit more about your background and what's keeping you busy these days.
Yeah, so it's been a bit at this point. I've been involved in the digital asset space for 6 going on 7 years. So this is not my first bear market for one thing. So that's been interesting to have that perspective of second or arguably third time around at this point. But yeah, my background is in marketing, strategy, operations. Before going to blockchain and crypto, that was for education, academia, research, and then for technology space in general. So I was involved in some privacy initiatives as well as fintech initiatives. And when you look at kind of that interest in impact, interest in privacy, interest in fintech, especially globally, have a pretty multinational, multilingual background. That's really where blockchain started to make a lot of sense to me as something that has a lot of upside around all of those areas. So I first got involved in the space in early 2017. Started investing in the space, researching. Was eventually was doing projects at Citibank in blockchain and cryptocurrency, as well as with other kind of more Web3 native projects in the space. So worked with Gemini and a number of other players as well. And what we're looking to do at this point, so I run CKC, which is a digital asset investment fund. We also have a side of our business that handles more of corporate development and helping projects kind of with their overall growth. But on the investment fund side, what we're looking to do is provide a well diversified, risk mitigated vehicle through which people globally can allocate into digital assets in a responsible manner, approaching digital assets just like they would other asset classes out there, and not as some mysterious, mystical, magical world, so to speak. And then what we're looking to do on the corporate development side is to help projects in the Web2 or kind of more traditional verticals, help them incorporate blockchain into their business models. The point there being that it's really in order for blockchain to really help businesses, there has to be an existing underlying use case, and in order for blockchain to really make sense in terms of global adoption, it has to be kind of supporting a bigger picture. So point there is that many projects think that if they just tack on blockchain or tack on AI or tack on any of these other buzzwords, that automatically this means growth. Conversely, what we're looking to do is help businesses that have sound fundamentals incorporate blockchain as a useful tool, or to help investors who are interested in fundamentals as well incorporate blockchain and digital assets into their overall portfolio.
Very cool. How many years has the fund been open now?
Yeah, so the new vehicle that we're launching is just about to launch, so it's not yet open to the public. But we have been building out a live trading and basically a test investment portfolio track record with actual money for the past 6+ years, and we've been able to outperform a Bitcoin only investment significantly over the course of that. So the median annual return of Bitcoin over the last 5 years has been about 80%, 80, and from our internal track record has been closer to about 119% median annual return.
That's incredible. Okay, say that again. That's how many?
80, 80 for Bitcoin, 119 for our internal track record with actual funds.
That's wild. So over the last 6 years, you're averaging over 100% per
Median,
year. That's
yeah,
wild.
median.
Okay.
Yeah.
Now you said that you are not only using Bitcoin. Can I ask what other digital assets are you using?
Yeah, so that's also I think important for a larger theme, right? So just thinking about, for example, conventional approaches to asset management, you have the stock market. You would, for example, you wouldn't just throw, or most people wouldn't just throw all of their money into any one stock in the market, right? Similarly, our thesis is that digital assets also require they require asset evaluation. They can require fundamental analysis. They require diversification. The portfolio requires rebalancing. All of this kind of stuff that you would do with stocks or bonds or similar assets. So to your point, Gabe, there are 23,000 plus different fungible digital assets out there, right? So thinking through Bitcoin is certainly it's the number one, but there's a very ever expanding ecosystem of these. Certainly many of those are not viable long-term investments, but that's part of the goal is to focus through, just like you wouldn't invest into every single stock on the stock market. Similarly, you would also be careful and thorough and methodical about how you invest into the digital asset market.
Yeah, so typically I think that's how most new industries just naturally evolve, right? Like if you go back to the year 1900, there were thousands of like motor carriage companies, like people who just put some kind of an engine on top of horse carriage. And next thing you know, they called it an automobile. And over the next 20 years, most of them, like 98% of them went bankrupt. And then you ended up like 5 or 10 viable car companies. And you saw something similar, with the green energy space. There was like 30, 40, 50 different companies making little wind turbines, for people's
Mm,
backyards kind of thing. And almost all
mm,
of them went bankrupt by now with only one or two
mm,
left. I imagine something
mm.
similar is happening with crypto, where it's just, like I said, crypto, it's a buzzword. Everyone's excited about it. A lot of companies are out there trying to do their own thing, but most of these are not viable long term. How many do you think are going to end up becoming viable out of these 23,000?
Yeah, well, I guess you raise a couple of interesting topics there. I mean, first off, not to digress too far, but I love the history approach of looking at some of these. I was also reading up on that a while back around history of scams as well, and they often kind of come in lockstep with new innovations. So with every emerging market, you also have an emerging groundswell of scams. And so there were railroad scams, there were automobile scams. There were actually, over the last couple of 100 years, there were a number of really famous people that were, wealthy, powerful, educated, that fell for some of these scams as well. I remember reading that Isaac Newton lost something like tens of millions of dollars in today's money. He was actually like a really wealthy guy, other than inventing a lot of amazing scientific concepts. But yeah, so to that point, it requires a careful approach, and just because we're, let's say, educated in one area doesn't mean that we're educated in another. So I think that's an interesting kind of insight, that if something terrible like that can happen to Isaac Newton, then it can also probably happen to us if we're not careful, right? So other points that you were raising, though. So let's see. For example, just about kind of the consolidation in the space, right?
Hmm.
So I think that I liked the car analogy. So to that point, there are uh, you know dozens of mainstream car manufacturers around the world, and probably several dozen other kind of more niche ones. But then I think maybe another analogy that could be a little bit more expansive in scope would be the Web 2 landscape of internet and such, because not all of these currencies are solving for the same use case. So it's like with a car, it would be, they're all automobiles, but this would be maybe more like overall transport, like let's say cars, motorcycles, lawnmowers, etc. Sort of, a broader ecosystem like that. Also thinking through, say, a Web 2 analogy, you would have social networks where, Facebook, Twitter, LinkedIn, etc., or you would have, say, an Apple or Microsoft that have as platforms. But then in addition, you also have companies building on top of those platforms. So I think the iPhone and then the App Store within it is a good example that not everyone, in the Web 2 space was trying to be the next Apple. Some of them were trying to build on top of what Apple had already made. That's a similar phenomenon that we're seeing in the Web3 blockchain digital asset landscape. So just related points there would be that, for example, not all so-called cryptocurrencies can or really even should be currencies. Cryptocurrency itself is kind of a misnomer, I would argue, in many cases, that some of these just genuinely do a bad job of being a transfer of value. Some of them do a bad job of being a store of value. Some of them do an excellent job at one or the other, but often it's, they optimize for a particular case. So you will have different use cases such as transfer of value in terms of, let's say, everyday transactions. You will have use cases such as store of larger amounts of value. You'll also have other use cases such as facilitating decentralized cloud computing that could really disrupt how a lot of what we're doing. Like we were talking about the podcast platform and some of the decentralized computing that you're talking about there. I think that's a really interesting use case for blockchain. So yeah, there's a broader scope than just the currency is, I think, something important to bear in mind. But yes, absolutely, there will be and there already is a contracting of the players in the space.
Yeah, and actually, one really cool use case that I came across a few months ago is there's a company here in the San Francisco Bay Area called Roofstock, and what they were
Mm,
able to do is they were able to take so Roofstock basically is a platform for buying and selling investment properties, like real estate, right?
mm,
Mainly
mm,
single family homes and also some small like multifamilies. But what they
mm,
were able to do is they were able to take an LLC that owns a single
mm,
family home and
right,
basically able to trade it as though it was a crypto. So anybody can log on to like a
right,
certain platform and just buy and sell, like click, 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 and anybody can buy and
right,
sell this LLC that owns a real property. In other words, it
right.
takes you not like just a simple click of the mouse to acquire a rental property. And it's got a
Yep.
tenant, and it's a full LLC that you're acquiring. That's got a tenant, it's got the house, it's got everything, including the mortgage or whatever. And then with a click of a mouse, you can sell it to another investor who wants to buy it. And I was like, wow, that's actually really powerful. It's really cool.
That's a good point, and I think that also brings up kind of a larger topic that you have digital assets that, as you were saying, that ties into my point. Digital assets extend far beyond cryptocurrencies, where the use case you're talking about is a really powerful one. It doesn't have anything directly to do with, say, cryptocurrency per se. It's the tokenization of kind of real world value, as some people like to call it. So that in general is an even wider market, really. So I was actually just having this conversation today. Uh, Analysts at Citi, at Boston Consulting Group, at the WEF are estimating a roughly, depending on the analysts, between the 10 and $20 trillion range for the overall tokenization market by 2030. And then BCG was projecting a roughly 60 trillion dollar market for tokenization by 2040, just 10 years after that. So that,
And
to
where
your
where do we
point,
stand
yeah.
today? Sorry, where do we stand today in terms of market cap?
So in terms of the fungible currency, cryptocurrency slash digital asset market cap of, say, coin market cap, which is kind of like the S&P tracker, whatnot, of the crypto world. It's been in the roughly $1 trillion range over,
Hmm.
kind of in recent memory. It's been significantly higher than that, during the bear market, excuse me, the bull market of last year, early last year, and the year prior. But beyond that, though, that's not even counting NFTs. It's not counting tokenized LLCs, et cetera, that you're referencing. It's a little harder to calculate that, but we would be extending into the solidly trillions of dollars range if we're including all of that.
And these two sources that you just quoted, it sounds like we are still expanding quite a bit in the next 5 to 10 years, from what it sounds like.
Absolutely. So, I mean, the basically exponential growth is the projection from a lot of these leading analysts and researchers. So, certainly from a kind of low trillions perspective right now to to a kind of a teens, like 16 or so, we'd be talking at least 3, 4, 5x growth in the overall market in the next few years, and then from there going from 16 to 60 from 2030 to 2040, as that BCG projection states, would be another roughly 4x growth as well. So very very compelling to be keeping tabs on what's going on there.
And for the average investor, right, who doesn't know that much about crypto, I mean, I don't know that much about crypto. I own a little bit of crypto, and I bought it all through like Coinbase, right? Because
Mm,
that's really the platform that to me
mm,
seems safe and whatever. And
mm,
to someone like me,
mm.
how would you kind of get past the abstractness of crypto? Because you mentioned there's like 23,000 different, cryptocurrencies out there. And I imagine the vast majority of these, it's very difficult to comprehend what is the actual use case for these, right? Like I think like
Right,
Bitcoin, I'm comfortable with it enough now that I have a like a
right,
little bit and I understand what it's used for. And Ether, I have this rough
right,
understanding that Ether is like Bitcoin, but it's a platform so you can build stuff on top of it. And
right,
then I'm hearing rumors that XRP is used like by banks for transfers. I'm like, okay, that sounds like a real use case. How many
right,
other of these coins are there that actually have like a tangible non-abstract use case?
right. So that is the multi-trillion dollar question right there, right? So, but I think a couple of relevant points there, right? So, firstly, I think just kind of even zooming back out beyond just crypto specifically, I think it's important to think about markets overall, right? So I think the mainstream media and just media in general loves to talk about crypto. It sells, the volatility, all of that stuff. But at the same time, there we found it really interesting kind of researching through larger market cycles here that I could cite any number of particular periods in the broader markets where, let's say, certain real estate markets, be they local or global, dipped way harder than Bitcoin, where Bitcoin stayed the same or actually even increased in value, or yeah, things like real estate or the bond market. There's certain bonds, depending on the timeline, where if you'd invested into even seemingly steady investments like bonds, which are kind of branded as the kind of the workhorse, the reliable workhorse of the investment world, you could have lost way more money, where Bitcoin was actually going up over the same time horizon. So the point being not who has the best asset. The point is that the larger tapestry of investing should require diversification. So, for example, I mean, I would be the first person to say, don't put all of your money into really anything unless you're willing to deal with the consequences of that, right? But kind of putting all your eggs in one basket in many cases is not investing; it's gambling, right? So whereas investing in a methodical, risk mitigated, an accountable way really involves diversifying. For a lot of people, that'll include some stocks, it'll include some bonds, some real estate, some crypto, maybe some precious metals, which they're often kind of conflated that crypto is like, or Bitcoin is digital gold, but they really do have in many cases different behavior. So that's me waxing a little poetic on kind of diversification all around, and that a lot of investors and analysts will really support, particularly high net worth investors and institutional analysts will support the value of allocating 4 to 5% into digital assets, including Bitcoin and other cryptocurrencies. Where you will see some people who are saying, "I'm never going to touch this stuff," and you'll see other people who just kind of went all in and sold their car and and their house and stuff. And for some of them it paid off, and for some of them it really, really didn't. But conversely, an approach that is methodical and measured, a lot of experts will say, a little bit in strategic areas. Beyond that, I think trying to identify overall value, there is I would say there is somewhat. I mean, it's always a challenge, even in the stock market, right? I mean, especially in a world of, say, the meme stocks and such. This has made us a lot more conscious of the fact that a stock price is not a pure equation of its kind of the utility or the financial value that it's providing to, say, its customers. It's also about sentiment. It's about fear. It's about greed. It's about uncertainty. It's about all of these different things. But most of the time, there is a opportunity to evaluate fundamentals around digital assets such as Bitcoin. There's an opportunity to explore the correlation that the asset price has with other cryptocurrencies, as well as with, let's say, other asset classes, bonds, stocks, etc. There's the opportunity to look at basically risk-adjusted rate of return projections. There's opportunity to look at at the underlying utility as related to just kind of use cases in general, adoption, partnerships, social media sentiment, many other areas. And so it's different than in some ways than evaluating a stock, but that doesn't necessarily mean it's some kind of super special use case. Asset classes in general just are different. You wouldn't take the exact same approach evaluating the potential of real estate as you would of a stock, but that doesn't mean that you would all of a sudden just kind of abandon all analytical frameworks.
You hit on a lot of things there, David. One of them was the 5%, right? You kind of mentioned that, look, if you have a portfolio and you're invested in all kinds of different things, generally you shouldn't put more than 5% of your net worth in any one particular asset, and cryptos aren't any different, right? So you're saying like 3%, 5% ish.
Well, so that was some surveys and research that some of our networks, some of our partners and related had conducted around kind of generalization around asset classes,
Hmm.
or specifically around the digital asset space. That's not investment advice. That's not tailored to any particular listener
Right.
situation. For some people, it will genuinely make sense to put significantly more than that. For other people, it will make sense to put in significantly less. But that was what we were finding specifically around the digital asset space, is that as an emerging asset class that exhibits low correlation with the vast majority of other asset classes out there, there's a very asymmetrical equation there, where there's putting in something in the area of 4 to 5% has potentially exponential upside while also having relatively minimal downside to the health of an overall portfolio. where, if the maximum that you could be losing is 5% of a portfolio versus the potential for really explosive exponential growth of the type that we've been talking about with Citi or WEF or BCG analysis, then that's where that argument comes in. But
Hmm.
that's also consult your own, financial
Absolutely.
advisor, lawyer, tax person, all of the above.
Yeah, this is not financial advice. And you're absolutely right. Actually, it sounds very similar to gold, right? Most people who invest in precious metals, they will put maybe 5 or 10% of a portfolio in precious metals, not more than that for the same reasons. Um,
Yep.
so tell me a little bit more about your fund. It sounds like when it's going to go live, what kind of investors will you be seeking, and what are your long-term plans with the fund?
So in terms of our overall just what we are doing, our primary focus is on basically active management of digital assets, particularly under a Cayman Islands regulatory framework, and there are a couple of reasons for that. So for one thing, Cayman is number one in kind of a number of kind of categories around international investing. So from our perspective, I for one, having kind of lived and traveled all around the world, I've lived in what, 6 different countries. I've traveled to 60 plus. It's something where, to me, the appeal of something like blockchain and crypto is its ability to really transform the global ecosystem in a way, adding to what's already there in a very meaningful way. So having an international framework that's really understood by a wide variety of people was really important to us. Beyond that, another area that we really liked about Cayman for this particular use case is not anything relating to taxes, but actually quite surprisingly to some people is around regulation, where that Cayman actually has restrictions on the requirements. For example, has requirements to conduct third-party audits that are of a very high grade, where there are many other jurisdictions, including the U.S., do not have as many or any requirements around third-party audits, let alone requiring, say, an auditor who actually is an auditor of publicly traded companies to do these kind of audits. Beyond that, also restrictions on uh, basically risk factors that we've been seeing really bite people and organizations over the last couple of years. So restrictions on risk factors such as leverage, which Alameda, FTX, Three Arrows Capital, all over leveraged, right? Or other risk factors being also just lack of clarity on regulation, where there are a lot of jurisdictions right now where there's just not very clear guidelines on what you can and can't do with digital assets. So conversely, for us, we really liked the idea of having clear auditing requirements, clear restriction on things like leverage or options, high risk futures, stuff like this, as well as clear guidelines on what can and cannot be done with digital assets in general. Back to that point of, an emerging asset class has volatility, which can be a good thing if managed properly. The approach of some, though, has been to kind of treat it like a lottery where, let's say 100x leverage trading on crypto options. It's like, okay, well, you could 1000x your portfolio overnight, or you could, lose absolutely everything. And as we were seeing with those kinds of approaches last year, well, there were a lot of pretty big players in the space who were losing a whole lot, right? So in terms of, and that ties back into your question, Gabe, about the overall thesis is coming down to basically taking a conventional asset management approach and applying that to the digital asset ecosystem. So conducting, comprehensive asset evaluation, and then basically translating that into a diversified and actively managed and actively rebalanced portfolio of various digital assets. and then layering in yield generating approaches. So kind of like in real estate where you could say, you know, buy a house and then also rent it with that's the total appreciation concept, is that you have the capital appreciation of the house price going up, and then you have the yield of the, you know, collecting the rent. And that kind of dual approach is very similar to what we do. Beyond that, another part of what makes us unique is our connection to the digital Davos community. So through our broader through the platform under which we operate, Chain BLX, we participate in events both online as well as in person in Davos, for example, in January upcoming, where CKC will have its own series of private events, and we'll be participating in panels and various other activities. One area that we feel very strongly about, the advantage of that is that we are able to get very timely insights on what's going on in the digital asset space, but also across broader markets and businesses, and to translate that into basically insights that we can leverage into better managing money for our investors. We can also basically open that up as a community where our investors also get to benefit from that as well, that ties into that point that we really only want to be a small picture of what's going on in an investor or a business's life, and we want them though to have the whole picture of what's going on in different countries, in different asset classes, in different markets.
Will you be opening this up to anyone in the US, or is it accredited investors only?
So we only work within. It depends on the country. Short answer, it is available to some U.S. investors who are already within our network. So we operate under Cayman rules and regulations, but we also need to abide by any regulations of basically that of where an investor lives. So it would be very case by case basis depending on the person or institution and on the country, but we can in certain predetermined cases work with most countries around the world.
David, I'm really curious about your opinion on this whole SEC, the SEC's approach to crypto, right? If someone just follows the news headlines, they'll see that first, I think the SEC had a lawsuit going against Binance. I think more recently it was against Coinbase. I know that SEC had some challenges with Ripple prior to those. What are your thoughts on the whole regulation space and the SEC in particular?
Yeah. So, well, there are a lot of things to say about that. I mean, for one, I think that back to that point of special, just like any other asset class, I don't think this is it for some. I think it's comforting to realize that this isn't something that's unique to crypto. This is something that just generally kind of has happened in various countries. So I think a good kind of framework for that is looking at, say, how China has dealt with innovation versus the US, where the US in general, not just with blockchain and crypto, has kind of tended to kind of let things kind of run their natural course up to a certain point, but then start slowly kind of tightening the grip on certain regulations, and that has a certain kind of trajectory of growing pains, where the upside is that it can help kind of fuel innovation early on. The downside is though that in some cases people can be punished retroactively for things that they, you know, put best effort, best faith into actually doing the legal and ethical way, right? Whereas in, let's say, a jurisdiction like China, there's often been a tendency to kind of just start out banning things and then slowly loosen the grip. So it's kind of the exact opposite approach, basically, which also has, you know, I think some pros and cons, right? But thinking through kind of regulation just in the broader landscape, I think that the overall themes that we're starting to see in the US, in Europe, and other places are generally ones that just happen in markets in general, right? So it's concerns about KYC and AML, which are important, and also concerns about uh, basically protecting retail investors who may not have enough information to make informed decisions, right? So to both of those points, I mean, that's also kind of similar motions to what were going on, around 100 years ago with the stock market are now happening in blockchain and crypto in the U.S. So, I mean, I think we can hopefully all agree that KYC, AML are important. We can also hopefully all agree that protecting retail investors are important. There is, of course, also though the flip side. I think in the case of retail investors, that some people feel that maybe it's getting in the way of retail investors accessing opportunities. There's always that kind of that delicate balance of protecting versus preventing. Is in investing in general, it's like if you're mitigating risk, you're also minimizing reward. So it's a tricky equation. In terms of other thoughts about regulation, I think that just generally has been the case for blockchain crypto over the last couple of years and continues to be that kind of some of these smaller nation states are ones that are really kind of leading the way. So, places like Malta or Cayman Islands or UAE, Dubai, Abu Dhabi, just really various around the world. It's just that when you have kind of smaller infrastructure, you can make a lot of these changes a lot faster. So that I think that will continue to be the case. Another area is and this is again pretty common just with any technology, is leapfrogging, where I think a lot of the places that are kind of most open to regulation are ones where maybe there have not been historically as many opportunities in their traditional financial systems as there have been in the traditional U.S. financial system, where going into a blockchain-based financial or infrastructure system can kind of really catapult innovation. Where an example would be, say, the U.S. with mobile phones really didn't adopt mobile phones particularly quickly, whereas some countries that didn't have the kind of comprehensive nationwide landline system of the U.S. just went straight to mobile phones with kind of a much faster adoption rate. I think that's also a similar thing where, ironically, perhaps those with perhaps less to lose, more to gain will end up kind of adopting faster.
What are the cryptocurrencies that get you really excited these days?
Oh wow. Well, I mean, I think I've been very interested in what's been happening with Ripple, 'cause, to that point about the regulatory climate, where I think that's an instance. It's important to bear in mind that a lawsuit is not a conviction, and a lot of times in the media, this is not just with blockchain or crypto, but this is with a lot of different things. News headlines galore about let's say arrests or convictions or this, that, or the other thing, but very little about acquittals or about the accused party actually triumphing. So I think that Coinbase and Ripple in particular, I mean, Coinbase's last lawsuit around had little to no effect on its stock price, for one thing, on the downside, and then post suit, actually, if anything, it helped the stock price because there were, I think, sophisticated folks who kind of knew better, basically. And somewhat similar with Ripple, it did kind of feel like a small sigh of relief in the space, just that had happened. I mean, there was some very healthy price gain on Ripple, which I guess time will tell whether that trend continues. Beyond that, I think I'm also really, without kind of naming any one name, because I think it's too soon to tell, but I'm really interested in kind of the interplays that are going to be happening between blockchain and AI. And I think that that's a code that hasn't necessarily been cracked yet per se, but I think that it's one that's very high potential, and there are a lot of horses in that race that I think as an overall, it'll be an interesting race to watch.
And is it true that Ripple is being used, or rather XRP is being used in bank-to-bank transfers? Is that true?
So I probably not the kind of the like Ripple expert, I would say, but they have been testing a lot of very interesting things. I'm generally a little cautious to say used in the crypto space, because you can go from a private test to all of a sudden like this is let's say if this happened a lot back especially like kind of 2017 2018. It's like game of telephone of there was someone using a Microsoft app as part of their tech infrastructure, and then that moves to like, they're partnered with Microsoft, and then the next news cycle was Microsoft is acquiring them, and I do think there are some very interesting use cases around Ripple and banking. I mean, that's something that I saw. I mean, also in let's say background in Citibank and related banks, that there is just so much there's so much siloing in the banking industry, even state to state within the United States, let alone with international Swift transfers and stuff. Just the lack of kind of interoperability in the banking system, even within the United States, for example, is very significant. So I think that the opportunities for Ripple and other projects tackling those larger problems are quite significant.
As we move to wrap up this interview, where can people reach out to you, and where can people follow you?
Yeah, so I'm fairly active on LinkedIn. Feel free to reach out or connect to me there for those of my kind of more say crypto inclined brothers and sisters. I'm also on Telegram, so David Doss, just at first name last name on Telegram. You can also reach out to me at david@ckc.fund. And beyond that, if you're interested in just learning more about what's going on in the digital asset space, we also have a biweekly newsletter on LinkedIn. So you can follow CKC Fund on LinkedIn, join the newsletter. We have various insights that we like to share with folks, as well as some events and kind of conference and speaking opportunities that we share as well.
Fantastic. I'll drop those links into the show notes. David Doss, thank you
Right
very
on.
much for joining us today. Hey, thanks for joining us for another episode of the Money Seed Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.